All right, so now don't say anything too obscene since we're being recorded now. All right, so the first one is the bank statement loan, and that's what we were doing with the contract that we had together.
On
Uh,
scenic?
Say that again.
On scenic?
Exactly. And so their scenario was very similar to many other business owners. They make incredible income, they write it off on their taxes, and they weren't able to qualify. So what they do with a bank statement loan is we get 12 months of bank statements instead of any tax returns, and we're able to calculate the income off of that, which is way more than what they would ever want to show on their taxes to avoid paying Uncle Sam. So
Hmm.
minimum credit score is 600.
That's low.
If you're
Yeah.
doing a primary purchase, you can put as little as 10% down. You can go loan amounts up to 4 million. And then it's also self-employed or 1099 borrowers. Um, yeah, you don't need any K-1s, no profit and loss statements, no 4506T. And then if you do need reserves, which is basically whatever the monthly payment is sitting in your bank to show that you've got that to fall back on.
Mhm.
But yeah, if you're putting more than 25% down, then that's not needed.
Okay. What is the rates typically range on those?
So the rate that they locked in was 6.824. So really, really competitive. The all of these are going to be borrower paid origination. So we usually have borrowers anticipate for closing costs to be around 3%. And
Okay.
that includes everything from title fees, appraisal, the lender,
Fees.
the lender fees, the prepaid taxes and insurance on the property. But that's just a good rule of thumb. Usually it's closer to about 2%, but we say three, that way people can plan accordingly.
Okay. And what
And
did you say
then
the rate was on that?
rate that was at par with no points was 6.8.
Okay.
Oh wait, 6.824, I think it was.
Okay. To seven, I'll just say. Okay.
And the good thing is you can buy the rate down if you've got the funds to do it, or if you've got the seller financing to do it, seller's funds to do it. So you're
Okay.
not stagnant at this is the set rate.
Okay.
And then this doesn't necessarily fit into what you're talking. I'll just briefly mention I-10. So
Yeah.
anybody that isn't a U.S. citizen that has the taxpayer identification number, we can do loans for them.
Okay.
What I think, sorry, say that again.
That's good to know.
Yeah. A really strong option. This is one of my favorite types of loans is a DSCR, and it is for your what I like to call amateur investor.
Okay.
So it's for somebody that's wanting to maybe pick up their first investment property or 10th, but basically it's not for somebody that's every day buying and selling homes, but this is for, a family or a small entity that's wanting to do that. And so what it is it's for you're able to buy an investment property without showing any income because the appraisal is done, a 1007, a market rent appraisal, and the rental amount is used for qualifying for your income.
Okay.
And so the you're able to, yeah, FICO score as low as 600. You can actually do a down payment of 15%. So I need to update this with no private mortgage insurance and loan amounts up to 3 million. It's for single family homes, up to 4 units. And I think that we've actually got a an investor that will now do up to 8 units.
Nice.
But yeah, really good option for somebody that doesn't want to show their income and wants to buy and hold for investment properties. And interest rates vary, of course, depending on credit score, down payment, everything else, but it's going to be close to that bank statement loan, probably high sixes to mid sevens, low sevens. So
Okay.
really, really competitive.
And that is called a DSCR. And
Uh-huh.
then, and so then you have appraiser that comes out and does an estimated value of rental
Correct. Uh-huh.
property.
So yeah, you've got your normal 1004, which is just your regular appraisal, and then a 1007, which is the market rent analysis. And that just makes sure that whatever the monthly payment is for the home, that your monthly rent is going to cover at least 80% of that.
Okay, so you don't even have to have the full, I mean, 80% to cover uh,
Right.
80%
So let's say,
rent payment,
yeah, monthly payments 1,000. You the market rent analysis would just have to come in at 800.
800. Yeah, nice. And that's 3% closing costs as well.
Uh-huh. Yeah.
Okay. All right. So it's 20 to 15 to 20% down, no PMI, 7%, approximately high sixes to 7% interest rate, um, 3% closing costs, 80% rent to mortgage to cover the payment.
Yep, and it
All
can
right.
be for short-term rentals or long-term rentals. So if you're looking to do Airbnb, VRBO, or
They
just
don't
what was that?
they don't care.
Yeah, usually with a short-term rental, you usually have to put 25% down.
Okay.
But if we get, I don't want to get into the weeds, but we can often do it where it's only 15 or 20%, just depending on how all the numbers shake out. And
Okay.
any other questions on that program?
I'm just doing some numbers here.
Yeah.
Uh,
And this is a program that I do with a lot of my, like I said, quote unquote, amateur investors. So we do have a spreadsheet that we can run numbers on and let you
cool.
know how that all shakes out to be.
Okay. Well, that's really cool. And then do you have any concerns about where so if they have existing properties and they decide that they're going to take a HELOC or something out on one of their other properties for the down payment, you don't care because you're strictly looking at this house's potential.
Yeah, so we'll still look at the credit of the individual
Sure.
and we'll look at the where the money's coming from. So it can come from a HELOC. That's shouldn't be a problem.
Okay.
The it can also close in the name of an LLC as well if somebody's wanting to do that.
No, that's really good to know. I mean, I was talking to another lender about this. 'Cause I bank at national banks. So they call me every so often and go, okay, what can we help you with? So I said, okay, here's the situation, the one I just shared with you.
Uh-huh.
They came back with a 9% interest rate. They wanted taxes. They want, I mean, they wanted the freaking world. I'm like, yeah, no, I don't think that's going. And they wanted the people to not put it in an LLC.
Hmm.
Well, every tax advisor is telling you to put it in an LLC. So, it was just not flowing well. So yeah,
Right.
this is a definitely a lot better plan.
Yeah, and it can be for purchase, it can be a refinance, a cash out refinance. So even if you got something with a hard money loan, fix it up so that it's financeable, then you could do your refinance and get onto they're just 30-year fixed loans.
Nice. Yeah. What was my other question on this? Yeah, because I think what you're like you said, a lot of these people, like the appraiser shared, right? Everybody's sitting on a 4% or lower interest rate. Even these investors, a lot of their loans are probably at 5. And now if they go to refinance, if cash out refi, they're going to be at 7. So it doesn't make sense anymore. So
Right.
they'd rather hold on to that mortgage, tap into some of the equity with a HELOC or whatever, and then buy their next property.
You got it.
So yeah, so this actually works pretty well with that kind of mindset for an investor.
Definitely. Yeah, and
Yeah,
you can make it so because it's a minimum of 15% down. If you're doing that, you have to have at least a 720 credit score, but you're able to get four houses for the price of three of what you would normally need to put down on an investment property because usually it's 20% down.
yeah,
So
45.
they're able to get four homes, getting the rental income on that. You're able to sell them four homes, and
Yeah.
then it's only with the capital that you would need for what would normally be three homes. So it's a great option.
Mm-hmm.
Just I'll do three more really quick.
Hmm.
I know our time's short, so we've got asset depletion, and this is similar to, might be along the lines of what you'd mentioned. Somebody's maybe got a lot. I'll just read this. So an asset depletion loan lets buyers qualify based on their savings or investments instead of their regular income. So if your client has a lot of assets but no traditional income, this is a type of loan that could help them get approved. So let's
That's
say,
paramount for a primary. Oh, it's second. I see second home is it? Okay, 25. Okay, gotcha.
yeah, so pretty basic there. One that's helpful for getting into one home from into another without having to sell your existing home. That's
Yeah.
what people are wanting to do is a bridge loan. Have you heard of that?
Yeah, I have. I've actually got a couple right now that are they're here. They're here now in Sedona. They have a home in Atlanta that's almost ready to put on market. And this is what they've decided now that they're here that they want to buy before they go back because they're realizing what a pain in the butt it is to go home, fix up their home, pack it all up, come back here, find a place to park for maybe a week, maybe maybe 6 months. They don't know where they put their stuff. And all of a sudden they've had a mind shift and this a bridge loan is what they probably need.
Uh-huh.
It's just so they have a lot of equity in the house that they have that they're selling.
Yeah. So they're looking to sell their home in Arizona or in Georgia.
LA in Georgia and buying here.
Okay. Okay. Yeah. So the unique, attractive piece about this is that instead of having two monthly payments, you only have one monthly payment because you're able to pull out equity from the home you're leaving. So pulling money out of your Atlanta house and putting that for the down payment on your home in Sedona. And you're only paying a monthly payment on the one in Sedona. You're still accruing interest on the home in Atlanta until you sell it. So interest is paid once you sell the home. You've got 12 months to sell the home. And the whole time, once you do sell the home, then you pay off, of course, that mortgage that you have along with any interest accrued, but you still only have the one mortgage payment after everything's sold.
Nice.
So that is really good option. Um, any questions on the bridge loan?
No, I got that. Cool.
Okay. And then lastly is just your jumbo non-QM. So we can go up to $10 million. And just everything beyond 4 million is going to be a management approval case by case scenario. Of course, higher credit score is going to give you much better pricing on interest rate, but they can go down to 660 and they usually require reserves in the bank, some funds that are available for the monthly payment after you close. But yeah, that's the skinny.
Okay, cool. Nice line of products. Thanks for that.
Yeah, for sure. Thanks for your time, and I'll stop the recording so you don't have to
Great.
listen to me ramble on.
And are
But
you going to